Good morning and welcome to the Money Control live stream. You're watching Markets with Santo and CJ. It's a brand new week and a lot of earnings to digest for us. Starting off with 197 Communication, or better known as Paytm.
Well,
Santo.
CJ, your favorite stock. I'm sure you must be all on fire
I
now.
think it's definitely time to Paytm Karo Santo for me. I mean, if you look at the earnings performance, very decent set of numbers. If you start with the top line, clearly 89% year-on-year growth, suggesting that revenue line, at least at this point of time, remains quite sustainable for the company. If you look at some of the internals as well, contribution profits jumped 35% on a sequential basis. I'm not even looking at the year-on-year performance because, of course, the year ago quarter was affected by COVID. But if you look at sequential numbers, contribution profits jumping around 35%. EBITDA before ESOP cost also improved quite substantially, about 93 crore. EBITDA loss, that is basically operating loss, that is improved by 93 crores on a sequential basis. And net payment margins in the payments business, that improved quite substantially by almost 900 basis points to 35%. So clearly, the internals are looking good. And if you look at Santo, what brokerage from Goldman Sachs had to say, they have increased their EBITDA estimate or profitability estimate for the company for FY23, and they believe that FY24 will be the first full year of adjusted EBITDA profits or break even for the company. So clearly, best in class revenue growth, and now with the profitability, it seems like we are firmly on that path to break even. Clearly, I think this rebound in the stock should sustain from here on.
Well, wait a minute. Profitably, path to profitability. Where are the profits so far, CJ?
Path to profitability. We are going to reach towards profitability, Santo. I think the profits have not come yet, of course, on the books, but I think clearly this company is heading in that direction.
CJ, this has become now a stock where the market seems to swing between two extremes. Suddenly they realize that maybe the stock is overvalued, and then they go hammering it all the way down. Then they realize probably they must have overdone it, and then you see the stock run up. Now, last 2 or 3 months, the stock has seen a fairly good run up there, almost 33%. So probably to some extent, the market is kind of accepting the fact that yes, things are not as dire as it seemed at one point. But that said, CJ, there is no escaping the fact that the path to profit still remains a little uncertain. When that will come is still anybody's guess at this point.
It will come in 6 quarters, September quarter of 2023.
Yes, we just have the company's word for that, right?
Absolutely.
So it is not too difficult to grow the top line if you look at it that way. Definitely, it credit to Paytm there, but ultimately it's the bottom line which counts. And in case of operating profit as well as net profit, the losses have only widened. Now here are some numbers from brokerage house CLSA, which has a bearish view on the stock. According to CLSA, the payments business, the contribution profit from payments business in FY23 is likely to be only 1,000 crores, in the best case scenario. Whereas at the same time, outside of ESOPs, Paytm still has 4,400 crore of fixed payments. So your payments, which being the main business of the company, still will account for just about 22% of the profits, which means that it has to heavily cross-sell and do a very good job of it to just kind of break even.
I think, Santo, you're not seeing the entire picture, right? Payments maybe would be a large contributing factor in the revenue of the company. But going ahead, it is the lending business that is going to contribute more to the profit line than the payments business, right? Payments generally in itself is, of course, is not a very high margin business, right? But lending is for the company. And even if you talk to the company, they have also indicated that they expect the profitability or the contribution margins from the lending business to actually continue to rise, and that in itself what will drive the company towards profitability. While payments will be the driving factor, of course, when you look at the top line, but the margins or the profit line will actually be driven by the lending business. And if you look at the lending business, they are doing quite well. I mean, the growth in terms of disbursement, in terms of loan value, has all been quite strong. And in terms of, even if you look at the risk to the portfolio, is also quite minimal at this point of time. We have not seen any sort of deterioration in terms of asset quality for Paytm, even though, of course, Paytm is largely a distributor. It does not really take the loans on its own balance sheet. But even what it is passing on to some of the NBFC partners and the banking partners, clearly there also it shows that asset quality is not really an issue.
Well, asset quality, now look at it, any company which is in the business of loan needs to have very strong underwriting capabilities as well. And banks, they have also struggled with it at some point, okay. And fintech, the big argument against fintechs when it comes to being, giving out loans is that how good are their underwriting capabilities. Now, as for the asset quality, yes, if it sustains, well and good, but there also one needs to see, to throw one of your lines back at you, it is very easy to give the loans, right?
Yeah, it is
also,
true.
the ticket size here is pretty small for
Yeah,
them to
that
be
is
able
true.
to make
but
huge
the
big
addressable
money.
market is larger, right?
Definitely. So, that is when then the asset quality issues will start coming in. When you are making too many loans at too less prices, that is when you will require really good
Well,
underwriting
we'll have to wait
capability.
and see, Santo. They have not cropped up so far. I mean, of course, CLSA and Macquarie may be bearish on the stock, and I'm sure. What price targets do they have on the stock? If I'm not
500 and 450
wow.
rupees.
And the stock is now sitting closer to 800. So
Well,
I don't know who's. I mean, if the whether the market is right or the brokerages are right. That's it for me. I think, Santo. Of course, in the past, if you look at when the stock hit its 52-week low, I think around 510 rupees or something like that, it seemed like this was going to go even worse, right? People were talking about 200, 250 also, but clearly the stock has since then rebounded quite sharply. We have 53% rebound, and a lot of this rebound actually, Santo, has been led by institutional investors, not even retail investors. I mean, you would expect that retail investors probably would want to capitalize the chance and try to play the contra game here, but in fact FIIs and domestic mutual funds who have in fact raised their stake in the company in the June quarter, of course also on the back of the promoter or you can call him the founder, basically Vijay Shekhar Sharma, also increasing his stake over the past few months. But for me, I think, Santo, this rebound is likely to continue on the back of the earnings show. Technical indicators, if you look at that also from a very short term point of view, the daily and the weekly technical indicators are also suggesting that the bullish momentum will continue.
Well, we'll keep the rest of the argument for a later date.
Definitely. Let's move on to how the trade setup is for today before we move on to other stocks on our radar. Clearly, SGS Nifty is indicating a very mildly negative start for the market on the back of the negative cues emerging from Wall Street on Friday. Wall Street, of course, had a very weak closing, Santo, on the back of a very, very strong jobs data for the month of July, which has basically scuppered all hopes that there would be a slowdown from the Fed on the rate hike front. Clearly, that trade is now not working out because the GDP did not contract as much as people were thinking. The job markets remain strong, and I think the Fed will probably continue to hike rates till the time inflation comes down.
Well, I think after this big run-up that we have seen over the last 3 weeks, it's only natural that you could see now the market consolidate for a while as it's digests its gain. The first quarter earnings probably were not as bad as feared, but on the margin, it was nothing great to write home about as well. So probably we could see the delayed effect of that going forward. And let's also not forget, at this point in time, we are also seeing again the fears about a rate hike resurfacing. There's some nervousness about that. Market first went to the other extreme. It went down all the way to 15,000, then realized that maybe this is overdone, and they've now started course correcting a bit. But at this point, again the focus, valuations having got to somewhat a fair level, the concerns are again about rate hikes, tightening of balance sheet, and you're already seeing some strength in the dollar index, which is not good for emerging markets in general.
I mean, with the rate hike view, if that does not change, of course, the dollar index, of course, that strength will also continue. I mean, we had seen a weakness recently because people were expecting that probably next year, because the Fed is tightening rates so fast, that the US economy will slip into a recession, and next year you could see rate cuts coming in. But clearly that trade is still not working out in the favor of the bulls, and we'll have to wait and see how the markets and global markets now react this week. Whether we see some unwinding of the long position, that is something to wait and watch out for, Santo.
Well, with that, we move into the stocks on our watch list this morning, starting with the State Bank of India. Well, it is a decent set of numbers. Well, I wouldn't really say spectacular, but what the strongest thing about SBI at this point in time is that it's very cheap valuation. It's still available. You're getting the largest book in the country for one time. Its book value. Now, few highlights of the quarter. Now, I know, CJ, what you're going to say is that improving asset quality is now not a big surprise really. Everyone is showing that, but still, just for the record, SBI's asset quality was the best in 27 quarters. That takes some doing. Also, the asset quality was helped by the fact that the bank is now aggressively writing off loans. It did quite a bit of that during the quarter, and at the same time, you're also seeing strong credit growth there, 16% up year on year, 3% quarter on quarter. The retail loan book has grown by close to about 19%. Big dampener was the huge M2M losses on the treasury book, but Chairman Dinesh Khera has said that some of it will be reversed in the quarters going forward. At this point, valuations and the loan book, the overall momentum in the loan book considered, I think this is a stock to keep an eye out for.
Well,
CJ.
Santo, it's really strange that entirety of 2020, late 2020 and early parts of 2021, SBI, ICICI Bank and Axis Bank were being sold as the corporate loan growth story, right? In particular, SBI and Axis Bank. But if you look at SBI's corporate loan book, it's only grown 10% on a year-on-year basis, which basically goes to show that still that side of the book, which was apparently supposed to be the major driver of advances for the company, for the lender going ahead, that is still lackluster, and there is still not enough juice in that book yet. And let's hope, for the betterment of the economy and the country, that does come back. But I think that is a point of concern for me. Apart from that, if you look at the return on assets as well, Santo, that has also seen a year-on-year decline. Return on assets ratio fell to about 0.48% from 0.557%. And for a company or for a bank looking at re-rating and improvement in valuation multiples, this is a little bit of a point of concern. Overall, of course, as you mentioned, the numbers were decent, but of course they were below market expectations. So I would expect the stock to not probably react too impressively to the numbers. You could expect some bit of underperformance going ahead, and the surge in slippages is something that came as a curveball. I think, Santo, the almost 180% increase in slippages in the quarter is something to be a little wary of, because that means that there could be additional provisioning happening going ahead.
Well, that is another way of looking at it, is that yes, slippages have increased, but if you look at the overall restructured book, it is still 1% of the total loan. So that really is not a big cause of concern, CJ.
Well, yeah, Santo, but my last point here would be that I think a lot of the re-rating or the valuation multiple expansion in SBI, I think, is already behind us, and from here on, if any expansion were to happen in valuation, of course, in terms of basically catching up to peers like ICICI Bank or HDFC Bank, I think that is going to be a very slow process from here on. I think quick gains are probably best had right now in SBI. Moving on to another new age technology stock that came out with its earnings on Friday, and this is Nykaa. Well, another company, probably the best in the entire new age pack, and very strong earnings, Santo, for the June quarter or the first quarter, which I think, in my opinion, adds to the confidence that the recent rebound in the stock that we have seen as well. If you look at some of the numbers that the company has thrown out, GMV or gross merchandise value grew about 20% on a sequential basis. EBITDA, operating profit, mind you guys, not operating loss in this instance, operating profit actually grew about 20% on a quarter basis. So clearly, I think going ahead, I would expect that the revival that we are seeing in the stock, and remember, this is one of the only few new age tech companies which have remained still substantially above its issue price, right? It's still making money for its IPO investors. So I would expect the rebound in the stock to continue on the back of these June quarter earnings.
Well, the stock price has, if you look at the last 3-4 months price trend, the stock price has not really rebounded. It fell sharply and then it's been in a narrow range. Now, a lot is being made out of the profitability here. Yes, the company has been profitable, definitely, CJ, no disputing that, but at the same time, profits are still very, very minuscule at this point of time, which automatically makes it.
That is true. It is a company in an investment phase, right?
Yes, you're talking about 4% margins here, operating profit
which
margins.
is also improved, by the way, on a year-on-year basis.
Well, CJ, now at this point in time, the company is battling very heavy competition, which means that it will have to keep investing more heavily, right? So you're going to see the operating expenses go up, which means that margins will be under pressure, and so will profitability be, which will always make the stock very expensive, at least in the foreseeable future.
Well, Santo, I think instead of, I mean, the picture is less it trying to, hold on to what it has, then it trying to expand what it has, right? The entry into fashion business, possible acquisitions going ahead as well. I think that goes to show that the company is very confident about its investment plans, and I think investors are also not being so worried about, I mean, unlike Zomato, where investors were so concerned about the Blinkit acquisition, I think in the case of Nykaa, the acquisitions are very, very well planned and very strategic, and I think market will ultimately be able to reward them for that.
Well, last two stocks, Mahindra and Mahindra, good set of numbers there. My only quibble here, CJ, is that maybe the market has already priced in much of the positive. The main driver here is the UV story, but within the UV story also, as one of the brokerages has pointed out, is that the demand for the higher end UVs is very strong, and there is where you're feeling the maximum pinch of the chip shortage, which means execution again could be a problem. That apart, the tractor segment is now beginning to show some signs of a bit of slackening there. The growth is decent, but not as strong as it was some quarters back. So maybe the best run of Mahindra and Mahindra they have already been seen by the market.
I think Santo, clear at this point of time, I think a lot of the focus on M&M is of course on the automotive side of the business, and clearly there, if you look at the revival in market share for the company, that is clearly very strong. I'll come back to M&M, but before we get into M&M, let's quickly take a check on how the market
Flat
has opened.
start to the day.
And it's a dead flat start on a Monday
like
morning.
A dull day ahead, at least from the looks of it. But market breadth is still very strong.
Yeah, I mean it's clearly the small
gainers
caps
and 500 stocks down, which means that mid caps are still in demand at this point in time. The Nifty Bank is slightly lower. Nifty Mid Cap Index is also slightly down. Sensex up by 55 points at this point.
Yeah, and Santo, I think the small cap space is where we are seeing most of the buying at this point of time. The Nifty Small Cap 100 Index is higher by 0.1%. The mid cap index also is in the positive territory. So clearly, I think the market, it's sort of shrugging off the weakness that we had seen on Wall Street on Friday, and hopefully long may this greenery continue. Well, coming back to M&M Santo, for me, I think going ahead, of course, one of the concerns for June quarter and the past few quarters, you talked about tractor business as well. The margin issue there has something that the analysts have highlighted. But I feel that going ahead, the margin profile should improve for the company, not only M&M, but the entire auto pack, given the fact that a lot of the raw material prices, such as steel and all, have come down substantially on a sequential basis. So I think that should provide a lot of tailwind to the tractor business margin, which is, of course, is the biggest contributor. And apart from that, in the SUV side, the order book remains quite strong. I mean, it's one of the best order books that the company has seen in recent while, because of the successful launches of models like Thar. You have the Scorpio N also coming out, and the bookings there have been quite strong. And now with the tractor business, I think, Santo, the key would be when the festive demand comes back strongly. Yes, there has been some slackening in volumes on a month-on-month basis, but if the festive demand comes back strongly, then you could see some bit of re-rating happening in the second half of the year for M&M.
Well, last stock on our watch list is Blue Star. Again, decent set of numbers there. However, quarter on quarter, the growth in top line growth actually declined. Typically, you have the June quarter, which is quite strong for companies that sell cooling products. Yes. But in the case of Blue Star, we've not seen that. And now this seems to be an industry-wide trend, because we didn't see that for Voltas either, and that makes me a little cautious on this stock.
Well, Santo, I think not much to say here. Clearly, this is an industry that is going through some bit of churn at this point of time because of raw material prices, slackening of demand. We will have to, of course, demand situation now will only get better probably during the festive period. We'll have to wait and see how that goes, goes ahead and unfolds for these companies. But the raw material side is, where I feel input cost is where I feel there could be some improvement going ahead. Voltas and all had talked about the fact that margins could start improving from the third quarter onwards, and I think that could be the only play remaining here on stock like Blue Star.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching it. Please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading session.